heard about crypto, that you've been involved with it. And I just, from a point of view, wanting to know, we from the old generation, we like to go to a bank, see a teller, and know that our money is behind a safe down there. Right? So that's why they've given us currency. They've given us things tangible. From the new generation, I know they're all digital, but from our point of view, how do we cross over from the old banking system to crypto is generally a digital thing. Everything is digital, right? Nothing, there's no statement or bank statement or anything like that. So how do we go about feeling comfortable with that?
They had a situation where a guy was retired and downsizing, and he sold his home and he was going to move to a smaller place and kind of, live out peaceful remaining years. But when he did his wire transfer, he accidentally wire transferred to the wrong person. So $500,000 went to a random account, and the bank says, listen, the guy doesn't want to give it back to you. There's absolutely nothing we can do. And with that, you don't feel very safe or protected. Now, to be honest, crypto is the exact same way. But when you consider the fact that you're paying extra for these bank services, and to be honest, the same errors can be made either way. I think that kind of brings forth the issues of the banking system. For example, if you want to send a wire transfer on a Friday, you have to do it before 5 p.m. before the banks close. And even then, no one's going to process it until Monday the next day.
That's true.
So realistically, it's the same principle. Instead of you going to a teller, them typing it in, maybe making a mistake, it's all things you can do yourself. And instead of paying $50, you can pay whatever the crypto you're using is, which might be anywhere from $15, $20, $30 to a couple cents. And it'll arrive in 15 minutes to a minute instead of 48 hours.
So it's faster.
It's faster, it's cheaper. Money's not going towards paying for these buildings, these tellers, all sorts of things like that. So there's a lot of disadvantages to our current banking system. And although it's what's been established, we really didn't have a better alternative solution until now.
So that's good, because there's a lot coming out about the banks and the banking system that has been unchallenged for 150 years. They control everything, and we realize we are in their pocket. Now, if I wanted to go to crypto, for example, what do I do? I've got $100. So where do I start? Who do I contact?
The easiest and most popular way is to go to an exchange now. There are websites that you can you transfer the money, and they say, okay, where do you want to send your crypto? You give them a wallet address and they send it to you. Those are the easiest ones.
You said go to a?
Or you go to an exchange.
So what is an exchange?
So exchange is similar. It'll be a company that operates and has a platform. So similar to how you'd buy stocks. You'd go to like Questrade, for example, and then once you add your funds on there, then you can say, okay, what stocks do you want to buy? If we're going to charge you this much, and things like that. So the exchange is the most common way. I believe right now they can even directly connect it to your banking. And the most popular, I think, is e-transfer right now. It's easier because the banks have banned people from sending money to exchanges. Like they don't want you buying crypto. So there's times where it's like, if you're with Scotiabank, too bad, you can't buy crypto. So then they were like, okay, here's what's going to happen. They set up a whole process. They're like, you e-transfer this email address with your name, and we'll add it to your account. And that's kind of what has been, I'd say, the standard currently for the exchanges.
Today I have a broker who I give all my money to, and he goes and gets stocks from different companies and gets me a balanced portfolio.
Correct.
So is there some brokers like that, or we go directly to the exchange and store the money there? And how does it expand? This broker gives me a return of 7 or 8%, whatever. Who do I give the money to in this exchange or in this system?
I don't believe currently that there is like brokers that'll help you pick out specific packages and whatnot. I assume it has to do with the volatility of the crypto market. The returns can be very high, they can be very low, and some things are super speculative and some things are safe. But even according to the banks, even the safe thing like Bitcoin is still like, no, that's a high risk.
So Bitcoin is one of the products of crypto?
Correct. Yeah, one of the many thousands.
Oh, is it?
Correct. They all have many different purposes and many different intentions, different fees, processing, all sorts of things.
So what is the Bitcoin? Is it like a stock or what?
I think the most common is comparing it to like digital gold, where Bitcoin realistically is just like a good store of value. Bitcoin is probably one of the most expensive and one of the slowest ways to send money in cryptocurrency.
Oh, I
When
see.
Bitcoin first came out, it was like, whoa, this is amazing. But then somebody saw that and they were like, we think we can do better. And the thing is, Bitcoin didn't expect to scale so much. So maybe at first it was like, for $10, you can send your money in 5 minutes. And now all of a sudden, so many people are trading Bitcoin and it's like, okay, for $10, you can send your money in 20 minutes. They had this big crypto event in Las Vegas and everyone came in. They're like, guys, you can pay through crypto to get in the door. Everyone's like, that's amazing. It was so crowded. So many people were trying to trade crypto that there wasn't enough processing power, that the fees went through the roof and the time was like an hour. So imagine you trying to buy a ticket to go into an event. They're like, okay, we're going to have to wait an hour for this process to make sure we got the money.
Right.
So then people were like, okay, well, we can improve on that. And then, things like Ethereum came out and they're like, okay, we'll make it twice as fast and twice as cheap. But then also they start to scale really high. And it's like, okay, we need somebody who can make it even faster and even cheaper. And then nowadays we have things where it's like you can pretty much send in a minute and it'll cost you a cent. And those are just other cryptocurrencies.
So Bitcoin and what was the other name in there?
Ethereum, for example.
They are products all of crypto, or crypto is the overall
Yeah,
system.
I'd say the cryptocurrencies represents all the currencies, and Bitcoin is just like the gold standard everyone trusts.
Okay.
You can expect it to not be as volatile as the rest.
So
because
why
there's so
would
much
I
money.
not want to buy a cheaper part of the crypto, lesser known? Why do I have to go for Bitcoin, which is the most expensive, or the gold standard?
In a sense, it would be the safest. For example, since there's $1 trillion in Bitcoin, in order for a Bitcoin to lose half its value, you'd have to sell half $1 trillion worth of Bitcoin. Some of these other things, there's like maybe $1 million in there. So one guy overnight could sell $500,000 and you could lose half your earnings overnight. And we have seen stuff like that where it's like 30-40% losses in one day. And that's why people prefer to say, keep the majority of your stuff in Bitcoin and then, explore with the rest. They're more prospecting. Now,
Right.
there is like a top 10 now that are pretty popular, but outside of that, you can go down the top 100, top 1,000, top 10,000.
So do we have to keep a track of, obviously we don't have brokers, so I'd have to keep a track of the value of Bitcoin and the other aspects of the currency to see whether it's safe or not safe or what.
Yeah, you definitely have to do your own research. But a lot of these exchanges offer, similar to how stocks do, like a stop loss.
Right.
So I bought in, had $100,000. If it falls to $90,000, please sell and turn it into.
Oh, I see. You have those agreements there.
Correct.
So how do I use that money? Now today I've got money in a bank. I just call my broker. He transfers it to my checking account and I can go and buy a car, for example.
Mm-hmm.
What do I do with Bitcoin? If I've decided to put 10,000 in Bitcoin, I bought $10,000 worth of Bitcoin, which is the value of a Bitcoin of that day, is it?
Correct, yeah.
And that's constantly fluctuating. So my 10,000 is becoming more because of the popularity of that.
Correct. I mean, simple supply and demand. As long as there is more people who want Bitcoin than people wanting to sell Bitcoin, the prices is going to go up.
So you have to want to sell it. Now, wanting to sell it, does that mean if I want to buy a car, I have to go to a car dealer that'll accept crypto?
Realistically, yes. If you want to directly barter for goods with Bitcoins, you would need somebody who is willing to accept crypto. There's a lot more than you'd think that's accepted, especially because it's not just Bitcoin. There's a bunch of other coins. For example, let's say 2020, Elon Musk decided, I love Dogecoin. He's a whole thing about it. And he said, you can buy Teslas with Doge. Just transfer it to our address. Process it.
How do you spell that?
DOGE. It's one of the top 10 coins, probably a lot of money in there.
So we need some big guys to stabilize these currencies.
Yeah, the more money in there, the more stable it's going to be for
stable
sure.
it is.
There are also a lot of companies who are offering payment processes. I buy things like crypto miners, and they'll give me a link and say, okay, you owe us $6,000. Pick from any of these 5 coins, pick which one, and you have an hour to start the process. I send it to them, they process it, and then they give the cash to the company, and then they take their fee. So there are things like that that are already in place that can kind of be middlemen. But to be honest, that's something that needs to be improved and refined, as I understand the fees aren't too cheap. I mean, in a sense, it's a similar way when you buy on a credit card. I believe the credit card companies will take 2 to 3% of whatever the purchase is.
Yeah.
So you might go to the gas station and buy something with your credit card, not realizing that, or mom and pop shop, and you want to give them $100 for your bill. Realistically, $3-4 is actually going to the credit card company, and they have to eat that just so they can accept your money. So in that sense, I mean, there's always a middleman, but I think with crypto adoption, especially when it comes peer to peer, if the other person has a wallet on their phone, you could just send them money. They can say received in a few minutes, and it could be that easy.
So now cryptocurrency is governed by what? Governments, private people, or what?
I think to an extent, the government can decide whether to outlaw it or how to classify it. But realistically, it's the code in cryptocurrency that regulates everything. They have set rules and set precedents from day one, and this is how the system must apply to.
And who started this crypto?
To be honest, with Bitcoin, it's still kind of anonymous. The guy named himself Satoshi Nakamoto. People are speculating he was Japanese, but other people have broken it down. It's like the Sa part was from Samsung, the Moto was from Motorola. Pretty much the entire name was made up of the top four, like I believe, Asian companies. So even that name is kind of like questionable. I think it's just a handle that he used online.
Right. But then we can trust that system. If I move, say, I'm retired now, so if I move some part of my retirement fund from the current banking system to a cryptocurrency, I expect it to rise according to the popularity of crypto rising.
Yeah, I mean, in a sense, and then it's the same as the stock market. Realistically, all it is popularity. Some companies, they publish reports and they say we're doing really profitable, and then the big hedge fund managers and the people who review stocks like, oh, this company's doing well, I'm going to buy more, and that drives the price.
Yeah, right.
Just because the company is doing well doesn't mean the price is going to go up. It's all about demand. So, for example, we had a situation with GameStop a few years back, and all the regular people decided, we love GameStop. We don't care if this company is doing poorly. We want to invest in it. And GameStop went from like $20, $30 to $200 almost in a few weeks, simply because popularity. So it's the same way the stock markets work, except, the stock markets, they have a few more supporting things, like we can show profit, we can show a credible company. And then with crypto, it is more about popularity and supply and demand.
I see, okay. There's no tangible statement or anything from the exchange to us saying that you have this much in, or is there, how do I know what's in that account of mine?
When you go onto an exchange, they'll show you your wallet, and they'll show you, these are the wallets you have. Like a wallet pretty much represents per coin. So you might have a wallet for Bitcoin, you might have a wallet for Ethereum, and then they'll show you this is how much in each of your wallets.
Okay.
And then they'll total it for you. They'll usually show you percent change. You can click on it and like, what's the change in a week, day, month? Similar to how stocks operate, in a sense.
And that exchange gives us an account number, basically, saying.
Exactly.
That lists down your different wallets you have.
Correct. And creating new accounts on crypto or new wallets, there's an infinite amount and an infinite possibility. You don't have to go to a bank and fill out this form and this and that.
So how do we do that if we want to start an account
with the exchanges? Due to like countries' regulations, like Canada, for example, they will want a few things like your name, phone number, address, and maybe like a passport, driver's license to verify who you are. That wasn't always required, but the government of Canada is saying, listen, like we need you to keep track of where our country's money is, for tax purposes mostly, but for things like that. So there is that little crossing, but to be honest, it takes 5 minutes. It's not as difficult as going down to the bank, filling it all out, showing them all your paperwork, this and that.
So we go online to a website that tells us, fill in this information, and they'll give you an account number.
Correct. And usually within a couple hours, they'll process it.
And then we transfer, say, $100 to them, and tell them which wallet we want it to go into.
They'll just put cash on your account, and then you can say, okay, what crypto do you want to buy with this cash?
So that's how it is. You just put cash into the account.
And then you can pick from there.
And I vaguely understand how the system works is that when I make a transfer it to another person, I tell the exchange, transfer it to that account.
Correct.
And that account number gets credited with the value that I've
transferred. You don't need anything other than the long specific code that belongs to that account.
I don't need to see what's going on behind the scenes where they're verifying everything.
Yeah, none of that. You don't even need to know the person's name. All you need is their wallet address, and you can send it. A lot of people in the crypto scene will tell you, like, don't keep the money on an exchange. If it's on the exchange, it's not technically your money. You've just been credited that. The same way they say, Sure, you can keep your money with the bank, but if the bank loses your money, are they always going to refund you? There's been instances where they don't. They just say, sorry, we lost your money. You can't do
Yeah,
anything about it.
I've lost money on the banks where the bank just dissolved, and they said they'll give you 10 cents on the dollar or whatever. And then we've lost money on the financial crisis of 2008. We build it so much, and then it just goes down back to zero, and then we have to start again.
Exactly.
So it's the same principle, I guess, over here,
Well,
or is it more secure than that?
It's
Because
more
then-
secure than that because if you keep it with yourself, no one can access it. There's just
So the financial crisis that in 2008 that happened was controlled by banks.
from my brief understanding, I did watch a couple documentaries. Pretty much the banks and the lending managers were giving not too high quality loans to people
I see.
for homes.
And they were defaulting.
Exactly. They were just like, we can make more money if we give these more people loans. It's like,
Yeah.
yeah, but these people aren't as trusted as some of the other people. Like, forget it, we'll make the money. And then they did that a bunch to the point where it's like, oh, a lot of people can't pay this money, and everything collapsed.
And they got the commission.
Yeah, they got their
The
commission
commission.
and they lost some. And honestly, in some cases, they didn't even get their commissions. They lost money on these trades because they were being so aggressive and greedy. But the funny thing is that you deposit your money in a bank for interest, 2%, and then the bank's taking it and then giving it to these people and say, pay us 10%. And then when that bet fails, because they offered somebody who didn't deserve a loan at 10%, and that fails, then they say, sorry, we lost your money. We can't get your 2%. In fact, we can't even get you any money back. And it's like,
So how does that situation not occur in crypto?
with crypto, realistically, there is no one who is lending out your money to let other people borrow.
Right.
The
It's just the value of crypto, of that currency increasing makes your value good or bad.
correct. Yeah,
It's not somebody, like you said, the bank takes my $100, gives it to somebody else, and charges them 10%,
it gives you a fraction back.
and gives me 2% back, and he keeps 8%.
Correct.
But in this case, there's no such
Exactly.
transaction happening, except the fact that as these coins get more in high demand, the value goes up.
Exactly.
So the purchasing value of that coin. So
Exactly.
today, the purchasing value of, say, example, Bitcoin is $130, right? So I put in $130, I get one Bitcoin.
Yeah.
I sit on it for about a few years. Now that becomes 250, and that's my return on investment for keeping it in that currency
Exactly.
without anyone taking any risk of that money of mine.
No, absolutely no.
Right.
And so the way it works, with like the U.S. dollar, for example, is that statistically there's $2.5 trillion in USD, and every year the government prints 5% more and does whatever they please with it to help manage the country. But if you have $100 cash and they print out 5% more, realistically that $100 is worth $95. So the price of bread goes up 5%. Now you can't buy the same amount of bread you could just because the government printed out more. So I think the biggest thing that attracted me to crypto was this inflation. So realistically, every year the government prints 5%. And over 5 years, you might lose 25%. Instead of $100, now you realistically only have $75. The amount of money stays the same, but the stuff you can buy is 25% less. And it's like, well, that's not right. So what crypto does is they set a finite supply of 21 million Bitcoin. And what they say is, we haven't created them all yet. Let's say we've created 17, 18 million of the 21. But when people are mining these Bitcoin to help keep the ledger alive, they create a little bit more Bitcoin every time they solve a problem.
So what is mining the Bitcoin? This is behind the scenes now.
This is the behind the scenes, all done through the computer code and the machines. So that does the mining. And through there, they create a little bit more Bitcoin every year, up until they reach the maximum of 21 million, which I believe honestly isn't supposed to happen for another 100 years. So the amount of Bitcoin they're actually producing isn't like 5% like the USD is.
Right.
It's a very small fraction. And on top of that, every 4 years, they cut the amount in half of that can be created. So the amount is like this, the supply of Bitcoin, the new stuff, it's constantly getting smaller and smaller and smaller. Whereas the supply of USD is constantly getting bigger and bigger and bigger, meaning that the value of your US dollars 100% shrinking every year.
Yeah.
And the value of Bitcoin, as long as the demand stays higher than how much is being printed, and for sure it has. There's been a time where it's like we printed out an extra $100 million of Bitcoin, but we brought over $400 million of new clients in. So it's like there is no inflation. In fact, it's increasing in value. And that's what we've been seeing a lot. For example, gold, what they're saying is realistically every year, 2% more gold gets added into the supply. So realistically, the value of gold is shrinking by 2% each year. If people stop buying gold, each year it would fall 2%. But because people are buying gold, gold is definitely the number one standard still currently today. It slowly grows about 10% a year. There's a lot more demand. But with Bitcoin, you can see that the amount that's being added into the whole supply is slowly shrinking. And for that reason, every 4 years, when that supply gets even smaller, we see even bigger spikes of increase in Bitcoin price.
Yeah, because I retired 5 years ago. I got a pension for that period in time, which was good. But now, because of inflation, I'm stuck because for the next 20 years, however long God wants me on this earth, I'm stuck with that pension that I got 5 years ago.
Exactly.
Unless I keep it in a recession-free place, which is nothing in the current banking system because they're always messing it up.
It'd have to be stocks or gold or homes. Realistically, those are the few places where you can keep your money where it won't shrink.
Yeah.
And even then, stocks are kind of a gamble depending on the markets. Gold's pretty safe and steady, and homes are pretty nice. I mean, homes have been like the number one pick, but they're like for like the elite and wealthy who has $1 million extra. I want to save 100. Like who has that kind of money? It's not really for the average person. Only the rich get ahead like that. So for the rest of us, we really didn't have any options except to gamble on stocks or to buy gold, which comes with its own problems. You know, you can't actually store bricks of gold and sell them at the shop, or you buy
true,
those
and
stocks.
we don't even know where that gold is. They say it's in Fort Knox, but who knows?
The same way. If it's not under your bed, it's not technically yours, so you don't know what's happening. For sure.
We can't really say that. But this, we've got a wallet that we can keep a track of. I've got 10 Bitcoin, and hopefully it'll rise in value according to demand as it gets more and more popular. That's my only hope, that it'll get popular in that. Because we are at the starting point of this whole currency. And I know the next generation is all going electronics. But then what happens if they pull the plug on us? No electronics.
Correct.
But then even the banks go down.
Everything went down. We had a situation where the internet went out in certain parts of certain cities around us, like in Brampton. So that meant nobody was able to pay with credit cards. And most people weren't able to work. And for the exact same thing. So if the internet goes down, realistically, everyone's in a lot of trouble. Yeah. And they even talk about the new thing called quantum computing, these computers that are thousands of times more stronger than the rest. And they say, well, what if they hack Bitcoin with that? I said, well, if they hack Bitcoin with that, they can hack our nukes with that. It's that powerful. Because Bitcoin realistically is currently the strongest algorithm that is hack-proof right now. So in that sense, it's one of the safest places to keep it. The odds of it being stolen are very low, almost impossible. Or maybe if the countries decide at one point, hey, Bitcoin is too much of a risk, it's illegal to have it now, it might lose some of its value for sure.
Could government say that you can't trade in it?
Yeah, absolutely. China's officially banned Bitcoin about 3 times, but to be honest, the people don't care. Even though it's been banned twice, they had
How could they stop the transactions?
If they catch people doing it, they jail them, take their funds.
So what happens to my 10 Bitcoin that I have if government of Canada says we are supporting only the banking system and not cryptocurrency?
If you keep it on an exchange, likely the exchange will give you a warning, and then that's where you would take it and put it onto your personal wallet, onto your bed, and they can't do anything. But if you leave it with an exchange, maybe they shut the exchange down and things like that. But normally, I have seen it happen with one of the biggest exchanges in USA. And the USA went to them and said, listen, we want to know all of our US citizens who have money with you. And they said, no, crypto's anonymous, we're not doing that. And they said, okay, then you have to leave our country and not serve our people. They said, great. There's still some lawsuits that took place, but it hurt crypto, and the people had to find a way to take their money out. They give them a warning, at least in time. But chances are prices will be quickly sinking as that's happening. But so things like that have happened. But in my personal opinion, with the sheer amount of greed that goes into politics, I really don't see that happening anymore. To be honest, crypto is bad for the government. It's not good for them. But these people are so corrupt, they'll take these bribes and say, sure, crypto's great, I'll do it. And they don't realize that, 20 years down the line, they're really going to hurt the government. Once they stop printing money, and because there isn't as much supply and the US dollar isn't as popular, they're not going to be able to manage their country as well because people don't believe in your garbage anymore. We believe in something that's fair and traded evenly and there's actual rules behind. It is going to cause problems, but simply due to the corruption in the government, people can get away with that just like they always have been. The governments, the banking, and the banking system combined, because the government sets the policies, the banks kind of carry them out.
Exactly. So they're hand in glove, obviously. The governments are run by the banks, basically. So if the Canadian government said we're not allowing any cryptocurrency in Canada, can I go to the US and trade over there?
Absolutely.
Because the wallet is still worldwide, right?
Exactly. There's people who said, you know what, I don't want to pay taxes on my crypto, and they're doing so well, they just move to countries and there are no taxes with their crypto. It's that simple.
But you don't have to physically move there. You don't have to transfer.
And realistically, once you transfer your crypto to a little USB under your bed, there's no names attached. Like when you're on an exchange, yeah, this says this belongs to your name. But once it's on another wallet, there's no name to it. They don't know whose money that is. That could be anyone's. So realistically, you could still trade Bitcoin in Canada. You just have to find other places that are accepting and willing. So even that, it's very anonymous in that sense. With the exchanges, it's very clear cut. You have to give your name and ID, this and that. But once you move it off an exchange, they don't know whose money that is, whose wallet that is. And that should scare the governments because how do you tax that? It's like they could be losing out on a lot of value.
So coming back to this, if I take out $1,000 from my RRSP and I put it into purchasing of coins, do I have to show a statement from that, the value of it? Currently, the government taxes only interest on investments, which if I were to put it with Manulife, then they send me a statement and then they tell me this is the interest I collected over the year, and that's what I have to declare to pay taxes on.
Correct.
In this case, the value of my Bitcoin was $120. By the end of the year, it's $180. Who is to say that I earned $60 when I haven't even cashed that $60?
They won't charge you until you cash it.
Oh, I see.
And not just cash it. I mean, once you sell it, and let's say you sell Bitcoin so you can buy another coin, that $60, that technically you need to report to the government
As gain.
Yeah, gain. Exactly.
Gain on investment.
I think the way that they've classified it is similar to like a home in a sense, where it's an asset. So whatever the difference is between how much you bought it for and how much you sold it for, that difference is how much you need to pay in taxes. And it's not as complex because when you keep it on an exchange, they have other things you can sign up to, like, I don't know, $200-300 a year, just one-time fee, and then they'll just process it all for you. They might ask you a question like, what happened to this? And you can say, I traded it or I sold it or this and that. And then they'll, at the end, punch it together and say, this is realistically how much you gained and this is how much you owe in taxes. And then you'd submit that to the government. So similar to a house, you're not going to get taxed on your home value increasing, but when you decide to sell that house, then they're going to say, okay, how much money did you make? We need our piece.
Yeah. And I've noticed in some of these ATMs, it has a B and a dollar in it. Is that the Bitcoin? So what do you get out of it?
Similar to an ATM where you can either give it Bitcoin and it'll give you cash, or you can give it cash or credit, whatever.
But what is a Bitcoin? Is it a piece of paper? Or
Well, it can be a piece of paper with your wallet information on it. You know, like your 12-digit 1, 2, 3, 7, 8, 9, 10,
Yeah.
and how much money is on there. Or you could give it your wallet address, for example, and it'll transfer that money to your account.
Oh, so that is used for just transferring.
Yeah, for either selling or buying. They do have limits, so it can be a little bit more regulated. I think it's up to like a couple grand, maybe. I go to an exchange, I'll pay 2% to buy Bitcoin. I'll put in $100, I'll get $98 worth of Bitcoin. The exchange wants its cut.
Right.
With those ATMs, they take about 5 to 10%. So
Because of convenience, they've got it around the corner.
And so that's how they make their money. And it's not the best method, but it is a quite simple one, and it just does make it a little bit more accessible.
Right. So if I want to start having something in crypto because everyone's talking about it, do I just go to an exchange, get an account number, transfer money from this to the exchange, and then they'll purchase whatever the coins I want?
Exactly. You'll be credited an amount and you can purchase whatever you please. So there's a lot of exchanges, but only a few of them that are legal in Canada. I think we have like Kraken, Crypto.com, and Coinbase. So those are at least my favorite ones. But yeah, I think there's like 6, maybe 7 of them top that allow to operate in Canada, and you can choose any one you want.
And they've been here for a while.
Yeah, Crypto.com, I believe in the last peak, they bought the basketball arena in Los Angeles. I think they paid like $20 million. So now every time in basketball games and sporting events, they'll say in the crypto.com arena. So it's like they're pretty big
So
companies
they're
at this
getting-
point.
Right.
Yeah, they're very popular. Before that, they were sponsoring UFC. Coinbase, I think, is a U.S. company. They're on the stock exchange as well. Like they're a legit company. So yeah, a lot of them now that are operating in Canada are pretty safe and regulated, and there's not too many risks of things like that.
Yeah. So this is not like buying a stock and waiting to see whether that stock is good or not. If I were to move money from the banking system to the crypto system, I should do it in parts, and because I don't know that area, or
Yeah, personally, what I've always done is I just do a small amount first, make sure everything checks out okay, and then I invest more. But typically with investing, they say that the safest option is to just slowly accumulate more and more. They call it dollar cost averaging.
Yeah.
That way, you don't happen to buy on a day. Just so happens
That
it's
day,
super
yeah.
high and then it gets low for a while and it messes with you. Whereas if you buy a little bit a week,
Yeah.
it kind of averages the price out to what it was for that set period. But yeah, realistically, start with something small, see how it goes. Once you're like, oh, this is okay. Yeah. But if you do happen to invest now and think, okay, in a year or two from now, I might want to pull my money out, you might not be in the green at that time. If you're looking at like a 4, 5, 6 year span, sure. But if you're looking at something more short term, it's like you might want to be a little cautious with that. But what they have seen is that at its very peak, so for example, there was a point where Bitcoin hit 18,000 for the first time, and then it crashed. And then the next 3, 4 years, the lowest price was 18,000. And then it hit 60,000, and then it crashed again. And then it's like the past couple of years, the lowest it's been is 60,000. So it seems to be like the last peak always seems to be like the new bottom. And then from there on, it goes up and then crashes again. And it's like, okay, now that's the new bottom going forward. And that seems to be the reoccurring
that's how it is, keeping up, upward trend then.
Exactly. And that's simply because the supply gets cut in half. And all of a sudden, it's a lot harder to get Bitcoin. People have to pay more for it. And that's kind of been one of the key things to
Wow,
increasing the
yeah,
price.
that makes sense. That's how it goes up. Then.
We saw every single wallet, just the address. I can go online and see exactly what that wallet has done. They sent money from wallet A to wallet B, wallet C. So we've seen people, and people talk about it, and the guy has $300 million in Bitcoin. It hits 50,000. He decides to sell. It crashes in 7, 8 months later. And then he buys again at the lower point, and this guy doubled his Bitcoin holdings within a few months. And simply because he timed it.
And what about regulators on that? We have the Securities and Exchange Commission in the U.S. monitoring stocks that could be manipulated.
I don't think there's anything they can do
nothing
there.
over here.
No,
This is
and
not-
that was one of the reasons why it probably took them so long, is because it could be. But now that the market is so big, in order to manipulate it, you need to be manipulating $2.5 trillion worth. So it's like, unless you have, $500 billion invested, it's going to be hard for you to
You
actually
can't.
adjust the price.
All right.
But if you do invest in some of the smaller stuff, yes, there comes with risks.
Okay.
And then from there, if you want to learn about some of the other coins and what their purposes are, there's some interesting stuff going on, and we can talk about that. But piece by piece, there's a lot to
piece
cover.
by piece. I think I've gotten a lot of comfort now that I've spoken with you. Thanks for that.